Good afternoon and welcome to Biztech Asian Midday Marketwatch. Our guest today is Jeff Halley, Senior Market Analyst Asia Pacific at OANDA. Now, Jeff, as always, thanks for coming on the show.
Always a pleasure, Brian. Great to be here.
Now, before we start, let's take a look and see how crypto markets are performing. Then we'll look at regional markets and then we'll get your insights. So we start with Bitcoin. It's down to 42,649.3. It's down 3.12%. Ethereum is below the 3,000 mark. It's 2,962.71. It's down 5.11%. Now, looking at regional markets, we see the Nikkei at 30,142.82. It's down 0.32. The Shanghai Composite is at 3,601.66. It's up 0.53%. The Hang Seng is also up 1.46% at 24,561.75. ASX 200 is down 1.33% at 7,286.01. Now, closer to home, we've got the SGX, which is at 3,085.45. It's down 0.48%. And rounding up the numbers in positive territory is Bursa Malaysia, which is at 1,539.56, up 0.42%. So, Jeff, what is your view on how markets have performed this morning?
Well, I think it's really China risk this morning. It's been the overriding theme. We've seen iron ore prices come off by nearly 7% today, and that's clearly weighing on Australian equity markets, which have fallen by over 1% today. They obviously have a very high beta to whatever's going on in China. Again, across the rest of the region, there's a general negative sentiment as well regarding these power shortages in China, factory closures, refinery smelters being asked to close or conserve power. Now, I don't think what the market is doing is fully pricing in this potential knock-on effect through already disrupted supply chains across the rest of the world. But if this continues, I think that will be a story that will gather potentially more momentum. Strangely enough today, although most of Asia is in the red, China stocks have actually risen today. And I suspect that, like yesterday, we're seeing a combination of lower iron ore prices supporting sentiment slightly, but also I believe that China's national team of fund managers are in there doing some more smoothing work to make sure that the stock market doesn't have too many, that the negativity doesn't get out of hand. So I suspect there's a bit of artificialness about the China rally today in Asia. Even Evergrande and Evergrande's EV division or subsidiary are rallying strongly today in Hong Kong, which always sets alarm bells ringing for me.
Now, Jeff, I want to zoom in today on some of the risks associated with China. One of the things is, and to start off, we have a downgrade by Goldman Sachs, downgrading China's GDP growth expectations to 7.8%, down from 8.2% forecast. But as you correctly mentioned, the China risks are circulating, and I think no one's really done a deep dive into some of the big factors. The power crunch is one factor, obviously, which you've just mentioned. But the second factor, which receives a lot less emphasis, is the supply chain finance possible collapse and a chain reaction, because Evergrande is essentially one of the key financing areas is supply chain finance. Could you highlight some of the other risks that are associated within China and supply chain as a whole?
Well, I think the biggest part of it is this shared prosperity program by President Xi Jinping, which is intervening in many industries or sectors across the Chinese economy. And I was reading today that they're sending in inspectors to the 25 largest financial institutions over the next couple of weeks in China to look for signs of incompetence and corruption and general malfeasance. So this process is ongoing, and I think it was going to cap China's growth anyway. Now this energy crisis, if you want to call it that, is snuck up on everybody because the world was very complacent, and we've seen a sudden leap in coal and natural gas and oil prices over the last month. as the world, and it's not just China, it's Europe as well, approaches winter and realize that they probably don't have enough energy supplies there to meet the demands of this post-pandemic industrial boom. And I think a lot of people have been caught with their pants down, planners around the world, and now they're all scrambling. The knock-on effects, I still believe that Evergrande will be sorted out. I don't know if Evergrande will actually exist as an entity. It may be gutted, it may be dead equity, it may be chopped up, but something will happen there because millions of jobs are on the line because of Evergrande, and that will be the priority for the government there. I'm not anticipating a fall or a crunch in supply chain financing because it's not the actual risk worthiness or credit worthiness of the factories themselves or the businesses. It's that they A, can't get inputs, B, they can't get things such as raw materials at sensible prices, and now they can't get energy either. So I'm not anticipating a credit crisis in China, but I do agree that China growth will be less than what everyone expected. And I know that Nomura also downgraded growth today, and I think that's going to be a process that a lot of our forecasters follow in the next few weeks.
Jeff, the other thing that is a big worry now is this: with this shared prosperity narrative, where do foreign companies fit in? Because essentially, yeah, go ahead.
Oh, sorry, yeah, I thought you'd finished there. Sorry, Brian. Look, I think this is a really unquantified risk at the moment. Now, money talks, and so does greed. And so Western companies, if you just want to label them as that, let's call them outside of China, they just won't be able to help themselves. So I'll look at 1.3 billion people, 1.4 billion consumers, and they just won't be able to help themselves. They feel obliged to have exposure there at almost any cost. And so they're prepared to gloss over some of the yawning fractures, shall we say, or risks surrounding it. I don't think that's going to change anytime soon, but I could see a few more bodies along the road now because of it. I think the Chinese government doesn't do something for a month or 2 months and then stop. Yeah, they keep on doing it. And if they're starting this shared prosperity program now, it's going to keep on going for years. And I just can't see how China can grow at the same rates as it previously did because of it. I think the risks have increased exponentially for foreign companies within China as well, because it's clearly going to be China first and everybody else second. So I think this is a story that's going to perhaps gather more traction into 2022.
Now, Jeff, final question. What is your view that we should look out for this week in terms of key events and data points?
We've got Fed Chairman Jerome Powell speaking tonight at a Congressional Banking and Finance Committee. Now, the risks there is that he's less transitory inflation than he previously was. That's probably going to see yields spike in the US, the dollar rise, and it isn't going to be great for equities. Apart from that, we also have on Thursday, and I think this will be really important for Asian markets, and that's the official and non-official manufacturing and services PMIs on Thursday morning. There's a raft of them coming out in the rest of Asia at the end of the week as well, but they'll be the real guts of the question. Now, if those are soft again, this China weakness or this slowing growth in China story, I think, is going to grab a lot more momentum, and that could set up Asian equity markets and Asian currencies for quite a weak finish at the end of this week.
Jeff, as always, thank you very much for coming on the show.
A pleasure. Thank you.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, on Biztech Asian Midday Marketwatch. I'm Brian Fernandez. This video will be on our various platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.